Good afternoon, and thank you for joining Airbnb's conference call for the fourth quarter of 2025. As a reminder, this conference call is being recorded and will be available for replay from the investor relations section of Airbnb's website following this call. I will now hand the call over to Andrew Slavin, Vice President of Investor Relations. Please go ahead.
Good afternoon, and welcome to Airbnb's fourth quarter of 2025 earnings call. Thank you for joining us today. On the call, we have Airbnb's co-founder and CEO, Brian Chesky, and our Chief Financial Officer, Ellie Mertz. Earlier today, we issued a shareholder letter with our financial results and commentary for our fourth quarter of 2025. These items are also posted on the investor relations section of Airbnb's website. During the call, we'll provide some brief opening remarks and then spend the remainder of time on Q&A. Before I turn it over to Brian, I'd like to remind everyone that we'll be making forward-looking statements on this call that involve a number of risks and uncertainties. Actual results may differ materially from those expressed or implied in the forward-looking statements due to a variety of factors. These factors are described under forward-looking statements in our shareholder letter and in our most recent filings with the Securities and Exchange Commission. We urge you to consider these factors and remind you that we undertake no obligation to update the information contained on this call to reflect subsequent events or circumstances. You should be aware that these statements should be considered estimates only and are not a guarantee of future performance. Also, during this call, we will discuss some non-GAAP financial measures. We provided reconciliations to the most directly comparable GAAP financial measures in the shareholder letter posted to our investor relations website. These non-GAAP measures are not intended to be a substitute for our GAAP results. And with that, I'm pleased to turn the call over to Brian.
All right, thank you, Andrew, and good afternoon, everyone. Thanks for joining. I'm going to start with a quick recap of our Q4 results, and then I'm going to spend a little more time on what's driving them, because that's really where the story is. Now, in Q4, we delivered strong results across the board. Revenue grew 12% year over year to $2.8 billion, exceeding the high end of our guidance. Gross booking value grew 16% year over year to $20.4 billion. This was our highest growth quarter in more than 2 years. Nights and seats booked grew 10%, our strongest quarter of the year. But what matters most is the momentum that we're gaining. In a marketplace, re-accelerating growth isn't as simple as stepping on the gas pedal. It's more like turning a cruise ship. It takes time and discipline, and you don't always see it from one quarter to the next. The acceleration that you're seeing didn't happen by accident. It's a result of a deliberate path that we've been on for the past few years. So let me walk you through it. Airbnb grew incredibly quickly in the years leading up to our IPO, faster than we'd ever imagined. We were like a company built to be a 2-story house. But when we went public, we wanted to keep building. But you can't add 10 floors to a house that wasn't designed for it. You need a stronger foundation. So we rebuilt our tech platform. We rebuilt the app tab by tab. And over the last few years, we improved nearly every part of the guest and host experience. But rebuilding the foundation wasn't enough. We also need to innovate faster. Now, when I look back at what drove Airbnb's early success, it wasn't just the idea. It was how we worked. In the early days, Joe, Nate, and I would sit in our apartment and obsess over every detail. We'd ship something, learn quickly, and double down on what worked. That cycle, focus, ship, learn, scale, is what compounded our initial growth. As companies grow, they often lose that speed and focus. So 2 years ago, we made a deliberate decision. We were going to recreate the same innovation formula inside Airbnb, but at a global scale. We called it Project Y. We created a small elite team and gave them a really clear mandate. Make it easier to find and book a home on Airbnb. We start with the little things that make booking harder than it needed to be. Simple improvements like better search filters and small tweaks to the booking flow. When those changes worked, we went bigger. We improved how we convert high-intent visitors into long-term users using simple web prompts to drive more app downloads. We made search more flexible, helping guests discover homes they wouldn't have seen before. That drove an even greater impact. Eventually, we tackled bigger opportunities, like completely redesigning the checkout flow to make booking simpler and more intuitive. Now, these are just a few of the hundreds of improvements the team shipped, driving hundreds of millions of dollars in revenue in 2025 alone. and we believe Project Hawaii will deliver hundreds of millions more this year. Now, once we saw this blueprint work, we began applying it across the company. So what I want to do is highlight 4 areas where the Hawaii innovation model is driving growth. The first is pricing. Hidden fees are one of the biggest friction points in travel. So we created a pricing team with a clear goal: make pricing simple and more transparent. The first major step was showing the total price upfront to guests. In the US, we are the first major travel platform to do this. But price transparency was just the beginning. We launched dozens more updates, from more flexible cancellation policies to better pricing tools for hosts. These changes stacked. Then we made the biggest move of all: reserve now, pay later. For the first time, guests in the US could book eligible stays paying $0 upfront. The response was immediate, driving booking acceleration in Q4, especially for larger, high-priced homes. We're now expanding this to new markets, and it's a key part of the strength we're seeing in Q1. Now, we believe that pricing initiatives will drive as much revenue this year as Hawaii and will remain a strong tailwind for years to come. Next up, supply. Most of our supply growth is organic, with hosts coming directly to us. But we've also built a supply engine that lets us be surgical about where we grow. And the best example is how we lean into large events. For example, in Paris, we added over 40,000 listings for the 2024 Summer Olympics. Now, we're repeating that same playbook for the biggest event on Earth, the 2026 FIFA World Cup, across 16 cities in North America. At the same time, we're also improving quality. We've removed over 500,000 low-quality listings, while guest favorites, the very best listings in Airbnb, grew 30% in 2025 compared to 2024. And in Q4, guest favorites made up nearly half of all bookings on Airbnb. We also applied the Hawaii model international growth. Airbnb operates in nearly every country in the world, but roughly 70% of our revenue comes from just 5 countries. Now, that's a massive opportunity, and we're unlocking it by going deep in a small number of priority countries. And Brazil is a great example. A few years ago, Brazil was a smaller market for us, so we put a focused team on it. We introduced features that we know matter to the Brazilian market, like interest-free payments and local payment methods, and we leaned into cultural moments like Carnival. We also invested in local campaigns to build relevance. The results have been incredible. Brazil moved from a top 10 market to a top 5 market on Airbnb. In Q4, it was our second largest contributor to first-time bookers, behind only the US. This shows what happens when you pair global scale with local execution. And we're applying the same playbook to our highest priority countries in every region. Finally, we're applying the Hawaii model to new businesses. We launched services and experiences globally in May, but to better scale them, we're taking a city-by-city approach. We're going deep in one place, reaching product market fit, and expanding from there. We started with Paris for experiences and LA for services, and we're really seeing great results. We're also starting to test new services like grocery delivery and airport pickups to make each trip better from the very beginning. And to capture even more trips, we're bringing boutique and independent hotels onto the platform so that no matter what kind of stay a guest wants, they can always find it on Airbnb. Now, it's still early, but the opportunity with hotels is massive. And we plan to share more about our approach later this year. But the big idea here isn't just building a bunch of standalone businesses. These are all part of a much larger vision, the Airbnb trip. We are one app and one brand, where every part of the trip makes the other parts stronger. There are multiple entry points into Airbnb and multiple ways to drive more bookings. A guest might book a service or experience, then discover a home for the trip. Or they might book a hotel for a business trip, then come back to Airbnb to book a home for a family vacation. Each part of the trip reinforces the others. The final piece that accelerates everything we do is AI. Now, we've taken a really intentional path here. While other companies rush to bolt chatbots into the existing apps, we started by solving the hardest problem, customer support. We built a custom AI agent trained on millions of our support interactions. It's already resolving a third of our support issues without needing a live specialist, and resolution times are significantly faster. It's live across North America, and we're planning to roll it out globally. But that's just the beginning, because we're building an AI-native experience where the app doesn't just search for you. It knows you. It will help guests plan their entire trip, help hosts better run their businesses, and help the company operate more efficiently at scale. That's a big reason we brought in Ahmed Al-Dali as our CTO. Ahmed is one of the world's leading AI experts. He spent 16 years at Apple and most recently led the generative AI team at Meta that built the Llama models. He's an expert at pairing massive technical scale with world-class design, which is exactly how we're going to transform the Airbnb experience. This approach is also our strongest defense against disintermediation. A chatbot can give you a list of homes, but it can't give you the unique ones you find on Airbnb. A chatbot doesn't have our 200 million verified identities or our 500 million proprietary reviews. And it can't message the host, which 90% of our guests do. It can't provide global payment processing, customer support, or insurance. By layering AI over the entire Airbnb experience, we believe we're building something that's impossible to replicate. So you can see why we're so excited about the year ahead. And our guidance reflects that. We expect revenue growth to accelerate to at least low double digits in 2026. We expect adjusted EBITDA margins to be stable year over year. And we'll do all of this without investing billions or tens of billions of dollars. We don't need massive capital investment to grow. We don't own homes. We don't operate experiences. And we're not building data centers. What we're doing is finding small wins and scaling them profitably. That's why I've been able to generate free cash flow at nearly 40% of revenue and nearly $19 billion of cumulative free cash flow since our IPO. It gives us the ability to reinvest back in our business while strengthening our balance sheet and maintaining healthy margins. Now, as you look ahead to 2026, we can't predict every quarter with precision. Travel is influenced by everything from currency to macroeconomic conditions to global events. But what we can control is the speed of our innovation. In the long run, that's what leads to more growth. So, in summary, we rebuilt major parts of the company. We adopted a new blueprint for innovation. And now we're seeing increased momentum. That doesn't happen by accident. It's a result of an incredible team rowing in the same direction at global scale. So to everyone the Airbnb team is listening, thank you. The business is stronger because of you. With that, I'll turn it over to Ellie to walk through the financials in more detail.
Thanks, Brian, and good afternoon, everyone. As Brian just shared, we're seeing increased momentum in our business. I'll start with Q4 financial results, and then I'll cover our outlook for Q1 and the full year 2026. Q4 was a great quarter for Airbnb. Gross booking value grew 16% year over year to $20.4 billion, driven by strong growth in both bookings and price. Nights and seats booked increased 10% year over year, an acceleration from Q3, with strength seen across all regions. By region, Latin America grew in the high teens, Asia Pacific grew in the mid-teens, EMEA accelerated in the high single digits, and North America grew in the mid-single digits. Now, going into the quarter, we expected a tough comp given a particularly strong Q4 in 2024. And as the quarter played out, we saw a slightly better macroeconomic environment than anticipated. But more importantly, our product roadmap delivered material lift to the business. As Brian shared, we've been steadily making it easier to find and book a home on Airbnb. In Q4, a few updates in particular helped drive our acceleration. The launch of Reserve Now, Pay Later, updates to our cancellation policies, and the beginning of our migration to a simplified fee structure. Reserve Now, Pay Later saw significant adoption among eligible guests in Q4. It's also led to longer booking lead times and a mix shift towards larger entire homes, especially those with 4 or more bedrooms, contributing to the increase in ADR. And as Brian mentioned, given the positive results, we've decided to roll it out to more guests globally and to cross-border stays in the U.S. Our updated cancellation policies and simplified fees also contributed to both nights and GBV growth in the quarter. As a reminder, beginning in October, we started simplifying our fee structure, which we believe will help our host price more competitively. We began migrating our API hosts to a single service fee and now plan to migrate more hosts in 2026. Hosts on a single service fee can adjust their prices to maintain the same net earnings while guests continue to see the full price upfront. In total, we estimate these three features delivered over 200 basis points of growth in nights booked and roughly 300 basis points of growth in GBV in Q4. In 2026, we'll continue iterating to simplify pricing, improve transparency, and help our hosts stay competitive. Now turning to our Q4 financials. Revenue was $2.8 billion, up 12% year over year, and exceeded our guidance, driven by the impact of our product update. In terms of profitability, we generated $786 million of adjusted EBITDA, representing a 28% adjusted EBITDA margin, also exceeding guidance. Finally, net income was $341 million and was negatively impacted by roughly $90 million of one-time non-income tax. For 2025, our full-year effective tax rate was 20%, including one-time discrete items that increased our provision for income taxes in Q3. Now, starting in 2026, we expect the One Big Beautiful Bill Act to materially reduce our effective tax rate to the mid to high teens, primarily due to how foreign earnings are taxed, which will benefit our consolidated earnings. Next, to our balance sheet and cash flow. We continue to generate significant cash in Q4, delivering $520 million of free cash flow. In 2025, we generated $4.6 billion, representing a free cash flow margin of 38%. At the end of Q4, we had $11 billion of corporate cash and investments, as well as $7 billion of funds held on behalf of our guests. Our strong balance sheet allowed us to repurchase $1.1 billion of our common stock in Q4, up from $857 million in Q3. And in 2025, we repurchased $3.8 billion of our common stock, using over 80% of our free cash flow. Returning capital to shareholders remains a key component of our capital allocation strategy. Since introducing our share repurchase program in 2022, we've reduced our fully diluted share count by about 9%. Now let's shift to our Q1 and full year 2026 outlook. We're encouraged by the momentum we've seen so far this year and excited about our roadmap to drive growth in 2026. In Q1, we expect to generate revenue of $2.59 to $2.63 billion, representing year-over-year growth of 14 to 16%. This includes an approximate 3-point FX tailwind after factoring in our hedging program. We expect gross booking value to increase in the low teens year-over-year, driven by high single-digit growth in nights and seats booked, and a moderate increase in ADR due to price appreciation and FX. On profitability, we expect Q1 adjusted EBITDA margin to be approximately flat year-over-year. And for the full year 2026, we expect year-over-year revenue growth to accelerate to low double digits, with an ambition to grow even faster than that. While FX tailwinds should fade as the year progresses, we're encouraged by healthy demand and execution across our growth initiatives. We're also excited about major events this year, including the Winter Olympics happening now in Milan and the FIFA World Cup coming this summer. Cities continue to look to AirBnB to help meet demand around large events, and our global supply positions us well to support that demand. Overall, we believe continued progress against our product optimizations, pilots, and new offerings, together with broader macro conditions, will support incremental growth in 2026. And finally, across the full P&L, we're continuing to drive efficiencies in our platform. We plan to reinvest most of these efficiencies into marketing, product, and technology to support our growth. As a result, we expect our 2026 adjusted EBITDA margin to be stable year-over-year. As a close, 2025 was an exciting year, and I'm incredibly proud of what the team delivered. We're carrying that momentum into 2026 with an ambitious set of goals. We'll continue strengthening our core business while accelerating innovation to drive growth. And with that, I will open it up to Q&A.
Thank you. We will now begin the question and answer session. If you'd like to ask a question, please press star one on your telephone keypad. If you'd like to withdraw your question, simply press star one again. Your first question comes from the line of Richard Clarke from Bernstein. Your line is open.
Hi, good afternoon. I guess AI is the topic du jour, and you gave some helpful remarks about why the AI bots today can't match what Airbnb do. But given the sort of speed of innovations going on, why do you think those AI platforms couldn't launch a short-term rental platform over time? And maybe secondly, do you see any risk that you'll have to share your economics with a AI platform at some point going forward, or do you expect you'll be able to retain the same level of direct traffic you have today in an AI world? Thanks.
Yeah, I mean, it's a great question. Let me start by saying this. The vast majority of what is Airbnb is not the app that you see. First of all, we have a whole host app, which is really critical. We built this over 18 years. We handle more than $100 billion in payments through the platform. Customer service is one of the most difficult problems in Airbnb. We don't have SKUs. We need to adjudicate between people speaking different languages. We provide insurance and protection for everyone. We do a lot of verifications. 90% of people who book on Airbnb send a message. You can't send a message without a verified ID. We have 200 million verified IDs, which is more than US passports in circulation. The vast majority of our homes in our unique inventory is only on Airbnb. We're adding more offerings over time, and we think people are going to want to put them together into an itinerary that they could bring on in their phone with them when they're traveling. I think these chatbot platforms are going to be very similar to search. They're going to be really good top of funnel discoveries. And in fact, what we've seen is I think they're going to be positive for Airbnb. I'm very, very deep in this space. And what we see is that traffic that comes from chatbots converts at a higher rate than traffic that comes from Google. But the other thing to know, and this is the most important point, is that these models are not proprietary. The models on ChatGPT, the models in Gemini, the models in Claude, and the models like Kiwi are available to every single company. And so pretty soon, every company becomes an AI platform if they make the shift. We will be able to build everything everyone else will have if we use their models. And we believe specialization will win in travel. Because if somebody wants to find an Airbnb or have a trip, we can take their model, the same model they use, we can post-train it and tune it based on our millions of interactions. We can connect it to our customer support agent. We can connect it to our host. And that's fundamentally what we think. It's why we've hired Ahmed Al-Dali, one of the foremost leading experts in AI. Ahmed Al-Dali, in fact, built one of the models. He built the Llama model. And we want to build a team to make our company much more of an AI native company. So I think that for chatbots or AI companies to win, we don't need to live in a world where everyone else has to lose. I don't think that one company is going to own everything. I think we're going to be able to work together. And these companies will be very helpful top of funnel traffic generators for Airbnb, just like Google was.
Your next question comes from a line of John Colantuoni from Jefferies. Your line is open.
Okay, great. Thanks for taking my questions. I wanted to ask one on Asia region. Nights growth was still strong at the mid-teens, but did moderate from recent quarters. I know it's your smallest region, but I was hoping you could talk to what drove the slowdown and how you think about the growth opportunity in Asia Pacific over time. And second, I was curious on the services and experiences. Have you seen any signs that they're helping you acquire new customers that you can convert to accommodations, given that over half of your experiences weren't attached to an accommodation bookings? Thanks.
Let me start with the Asia question. So when we look at our performance on APAC from a destination perspective, overall growth has been, I would say, relatively stable over the course of 2025. That being said, we see a tremendous amount of opportunity in terms of future growth for the region. What I would say in terms of APAC is that obviously there's different pockets in terms of where we have seen substantial growth. As you're probably aware, we have relatively high levels of penetration in Australia, which factor into that number, whereas we're relatively nascent in some of the, I would say, continental countries, in particular places like India, Southeast Asia, Korea, etc. What we shared in the letter is that we're seeing nice performance in those markets that we have begun focusing on. So in particular, what I would call out is domestic Japan. That's a market and segment that we began our expansion playbook back in Q4 of 24 and have seen some nice results. Second, I would call out India, which we mentioned in the letter. Huge market where we are seeing really substantial growth. So 50% growth in the last quarter, very strong, and we see opportunities to accelerate that growth in 26. So the broad story on APAC is it is stable. We are seeing some very positive signs in particular markets that we're leaning into, and it's the focus of our international markets expansion strategy going forward. Second question. Yes, I mean, what we've called out in terms of the dynamics of where we are finding experience booking, the call out in the letter that we provided is about 50% of our experience bookings today come from guests that are unattached to a home booking, meaning they are not already staying with us in a home and therefore attached to the trip an incremental experience. They may be staying in a hotel in that market. They may be not traveling at all. And what I would say there is it's a very exciting opportunity for us in a couple of forms. One is it provides a new segment of guests that we can, in the future, convert to home guests. It also gives us signs that with these new products and offerings, we have the opportunity to have a higher frequency guest usage beyond just a big trip. So, for example, something that we see in Paris is that there's been really nice uptick in terms of, in particular, our Airbnb original experiences by local Parisians, which tells us that that category of inventory, albeit highly differentiated, is a great opportunity for us to attract local crowds to our app.
Yeah, I think one of the things that I called out in my opening remarks is we're seeing a lot of momentum about getting new offerings off the ground and piloted. And our basic idea is, it's not dissimilar from Amazon in the late 90s where they started the book retailer. The unifying idea of Amazon, though, probably was the cardboard box. In other words, everything that you could send in a cardboard box. And so you could send all these different things, and they added one category after the other. I think the unifying idea for Airbnb is the trip. We take a very, by the way, broad definition of the trip, including 30-day stays and even longer. But there are so many different components that we can offer. And the basic idea is we want every new offering to be strong enough to stand alone, but better together. And so hotel is a great example. There are some people that only stay in Airbnb. There's some people that only stay in hotels. Most people are willing to stay in both. And some trips are better in Airbnb. And then some trips, if you need a last minute stay, you're traveling for business, you're doing one night, it's really good for hotels. So we think that all these components can make the overall offering better. There's a lot of synergies.
Your next question comes from a line of Lee Horowitz from Deutsche Bank. Your line is open.
Great, thanks so much. I guess, can you give us a sense of how Reserve Now, Pay Later cancellations have been pacing relative to your expectations, perhaps particularly in the face of weather disruptions in the 1Q, and then how you're thinking about baking in cancellation expectations to your full year adjusted EBITDA guide? And then secondly, in the past, you've talked about how AI search will preclude your deployment of sponsored ads. Can you maybe just unpack that a bit more and explain how AI search particularly may help you bring sponsored ads to market a bit more quickly? Thanks so much.
So first on the question of Reserve Now, Pay Later, and the impact of cancellations. If we just back up for a moment, before we launched Reserve Now, Pay Later in the U.S. Back in the summer of 2025, we extensively tested the product to ensure that by the time the cohorts opting into the product had reached their check-in date, that it was net beneficial to the business, meaning that the growth lift in bookings was larger than the net increase in cancellations before check-in. We're doing that level of testing for each incremental segment. We are considering expanding Reserve Now, Pay Later out to ensure that the net benefit is obviously positive for the business. What I should say is that in the segments that we have launched this offering, the cancellation curves have been very close to what we saw from a tested perspective. And so we feel, frankly, quite good about the progress and the performance of that offering. In terms of its impact over the full year, obviously there is a bit of a pull forward in terms of when people make their booking, but we are already absorbing the elevated level of cancellations from that product. I think one piece of perspective is that in terms of the aggregate nominal increase in cancellations rate, it's approximately 1%. So, an average of maybe 16% cancellation rate historically going to 17. It's obviously higher within the cohort that chooses that product, but is not hugely material relative to the broader cancellations on the platform. Final thing I would just note on Reserve Now, Pay Later, as we've called out, it has lengthened lead times, which we think is good from a competitive perspective. And second, it has a modestly positive impact in terms of increasing ADR as consumers who don't need to, extend a huge purchase on their credit card are more likely to choose a slightly nicer listing.
Yeah, and then on the AI search and how it impacts sponsor listings, I've been asked, quite a few earnings calls about sponsor listings, and one of the things that being really clear after the launch of ChatGPT was that traditional search was going to become essentially conversational AI search, and that what we wanted to do is really design AI search, really see how that works, and then if we are going to do sponsor listings, we design that ad unit in that form factor. So we're focused first and foremost on the most perishable opportunity, which is AI search. Actually, funny enough, we are doing tests as we speak. So AI search is live to a very small percent of traffic right now. We're doing a lot of experimentation. The way we do things with AI is much more rapid iteration, not big launches. And over time, we're going to be experimenting with making AI search more conversational, integrating it into more of the trip. And eventually, we will be looking at sponsor listings as a result of that. But we want to first nail AI search.
Your next question comes from the line of Brian Nowak from Morgan Stanley. Your line is open.
Great. Thanks for taking my questions. Brian, maybe to go back to that last question on AI search, let me just ask you sort of another bigger picture one. As you sort of sit here in early 2026, if we're sitting here a year from now, what are the areas you are most focused on for seeing improvements to the platform using AI this year? That's one. And then two, maybe one just on the P&L impact. Any help at all on how you're thinking about the impact on gross margins from increased AI investment this year versus last year? Thanks.
Yeah, I can answer both of them. And I'll start with the second one. I think one of the great things about Airbnb is that we have a very, very cost-efficient innovation model. So unlike other companies, we're not building models. We do not have a huge CapEx cost base. So our investment in AI will not affect the P&L. I don't think you'll see it in the P&L. That's number one. Number two, it's a year from now. If we're successful with AI, what have we seen? I think 3 or 4 things. Number one, let's start with customer service. Right now, nearly 30% of tickets in North America that are English-based are handled by an AI agent. A year from now, if we're successful, significantly more than 30% of tickets will be handled by a customer service agent in many more languages, in all the languages where we have live agents. And AI customer service will not only be chat, it will be voice. So you can actually call and talk to an AI agent. We think this is going to be massive because not only does this reduce the cost base of Airbnb's customer service, but the kind of quality of service is going to be a huge step change. Not only can you get a response in seconds, but the agents using AI are going to be significantly more productive. That's number one. Number two, it's going to make our engineers and everyone at Airbnb significantly more efficient. More than 80% of engineers are now using AI tools. That soon will be 100%. But of course, that metric is a bit of a vanity metric. The real question is, what's the culture of the company? Are you a startup? Are you highly adaptable to the changing currents of AI? And I think Airbnb, certainly within our space, is the most adaptable. We are designed to adapt, to not move like a cruise ship, but to move very nimbly. So that's partly why we hired Amit Al-Dali. We wanted to be on the frontier of AI, at least for the non-native AI companies. And I think you're going to see a lot more productivity and a lot more innovation velocity. The third is you're going to start to see AI through the booking experience and the listing experience. AI search will eventually, I can't put a timeline on it because AI is obviously highly unpredictable, but we would love to be the first, company in e-commerce that really nails AI search, conversational search. I think it's really hard, not just in travel, but all e-commerce. One of the reasons that chatbots are really hard for commerce is because they're very visual. they're photo forward. You need to be able to compare. You need to be able to open different tabs. So a text forward chatbot interface is not the ideal. So we have to actually innovate on the user interface. We're also using AI across the board, like being able to list your space much more easily. So if we are successful 1 year from now, in summary, AI customer service will be voice and chat across all languages. It will penetrate many more ticket types. It will massively accelerate our innovation. It will be as AI native as any other company in our space or more. And then finally, the experience for guests and hosts will be materially better.
Your next question comes from a line of Doug Anmuth from JP Morgan. Your line is open.
This is Dayon for Doug. Thanks for taking my questions. I have two. First one, looking at the 2026 revenue acceleration guide, could you help us think through the acceleration drivers across the core markets?